Welcome to another paradigm shift video. I thought to make an update, which is going to be much more useful than just another Twitter post. So I'm going to keep it short and sweet. This one is called Bullish and Bullish charts, Bearish and Bearish charts, and you're going to see for some obvious reasons. In the last few months, I have been saying, and I thought that the stock market will have a correction. Mainly, as I was showing on Twitter, because since last October, indexes like Dow Jones, S&P, NASDAQ were not able to make new highs. So we can see from here that these highs were barely higher than these highs, for example. So for more than 6 months, we saw the inability of buyers to push the price above $7,000. I even made a post in which I said I'm very curious what's going to be the next catalyst, which is going to push the prices lower. And this is actually what happened. Once we lost 6,800, 6,786, that's more of an area, we saw that the distribution was confirmed on S&P 500. And obviously we started a downtrend. Lower highs, lower lows, the distribution was confirmed here with a bearish rejection, and we started printing, like I said, lower highs and lower lows. This all happened up until late March, when we started printing an inverse head and shoulders. So although I was bearish, right, above 6,600, there were no more reasons for me to be bearish. I made even an update a few days ago, and I said bullish and bullish charts, bearish and bearish charts. So once we had the inverse head and shoulders and we reclaimed 6,600, was no reason for me to look for shorts anymore. Currently, I'm neutral. We had a very beautiful bounce. Congratulations for the people who caught this bounce. I'm not one of them. I didn't long this bounce until today, earlier, above this price again. But this post and this video is not about this. It's just about being bullish on bullish charts and being bearish on bearish charts. So after we had the distribution, we had the correction. Personally, I thought that the result was going to be bigger. So we had around 10% from the highs. I think most of the people thought that this correction is going to be much bigger, given the geopolitical tensions in the Middle East. However, as we've seen, price led the way. We had an inverse head and shoulders, confirmation above the neckline. And right now, let's see where we are today. We are actually pressuring the all-time highs. So we are putting a lot of pressure on the previous all-time highs. It's going to be very curious, and that's why I said I'm not shorting this market anymore, and actually had a long above the previous highs from here this morning. It's going to be very interesting to see how the price will react around the 7,000 area, because we can see it since January, all the times we had rejections and no acceptance of the price above these highs. So let's see if we're going to have like a convincing high, something like this to take out the previous highs, and especially a weekly high above 7,000 to confirm an all-time high. If we're going to have a sweep of the highs, I have no idea how the price is going to react around these levels. Like I said, I have an entry from around this level earlier. I'm fine with this, but it's just a very small trade, very small size, because I respect the trend. So I'm bullish on bullish charts. Same thing for NASDAQ. I was calling for a top because we had a very clean double top. It was much more obvious than on S&P 500. So top one, top two, the M pattern and the neckline. We had the break, retest, and continuation to the downside. And we tested the 23,000 area, even some small liquidity sweep from there. I think if we can stretch it, we can even say that we had an inverse head and shoulders around this level, which was enough as a reversal pattern. And the price recovered above 24,000 area, a bounce about 24,500. So the previous neckline, which was flipped to supply, now is back flipped to demand. So I can safely also put it back to green. Very similar to S&P 500, a little bit lagging to compare to S&P 500. We can see that NASDAQ is about to also go to all-time high. So bullish on bullish charts, and bullish on the stock market above the levels that I mentioned. I'm just curious if we're going to have a strong continuation and a convincing new all-time high, and we're going to go in towards much higher levels, or if we're going to sweep the highs, print some fake highs, and we're going to go back lower. About shorting, if we're going to lose some other levels, I don't have a short bias right now, neither on S&P 500, which I said I have a small long from this morning, neither on NASDAQ. So TradFi, like I also mentioned, looks very strong, looks very good. No question about it. Anyone who's talked about low volumes, manipulations, stuff like that, they were just denying the price, or they were just trying to short something that it was looking so strong. So this is about the good part, bullish on bullish charts, right? Now about Bitcoin. like I said also on the morning update, morning post, we had so strong tailwinds, like this amazing recovery on equities, right? S&P, Dow Jones, Nasdaq. I think even IWM. Let's look at IGV, even IGV, right? Which it's extremely correlated to Bitcoin. Semiconductors all-time high. Even Max 7 recovered the previous distribution area, and now we are back inside the previous range. Let's see if we can take out the high from 67. So we have like strong tailwinds, extremely strong also inflows into ETFs, which are the highest, or they saw the highest level since January, and I did the leading those. And still Bitcoin is fighting with the 74, 76,000 area. For me, for me, this is nothing special, right? So people who kept calling bottoms all on the way down here are no different than people who call tops all on the way up in a bull market. So you saw people, they call tops here, they call tops here, they call tops here, they call tops here. After that, they call tops here, they call tops here, they call tops here, they call tops here. So eventually you get the picture, right? Eventually they got it right. They deleted those tweets, or they just buried those tweets, and they say, oh, I called the top. Similar thing here. I'm not going to call the bottom 50 times because the price didn't tell me that we made the bottom. Since late January, beginning of February, we are not making any new highs. So that's why, I kept repeating this chart, just, sometimes out of banter, because we saw a lot of narratives. We saw a lot of ISM charts, M2 money charts, Fed balance sheet expansion charts, whatever, all type of narratives and correlation, just trying to front run or just trying to push some sort of a narrative when price is clearly telling us that we are still in a downtrend. Call it however you want. We have a high, we have a low, we have a lower high, we have a lower low, we have a lower high, we have a lower low. And until we don't take out, in my opinion, at least 85 area, there is nothing changing structurally on Bitcoin. Absolutely nothing. So for me, yeah, I keep it very simple. Like I said, bullish on S&P, bullish on Nasdaq, bearish still on Bitcoin. And actually, last evening I was in a space with the guys from Wolf Bitcoin, and I think it was Calvin or Popeye, I don't remember. One of the guys mentioned to me this bear flag. I saw initially a rising wedge, which was obviously invalidated since we recovered about 70 to 74, but I cannot not see this picture perfect potential bear flag because we don't have a confirmation. What is the weird part? Not weird part, but concerning part for people who are calling bottoms right now without breaking above 80 and continuing above 85,000 is the fact that we have extremely strong tailwinds. So it would be weird to not speak about how strong the stock market is right now and the rallies and the recovery rallies that we have on Dow Jones, Nasdaq, S&P, semiconductors, even IGV with a strong bounce, MAGs, the ETF, and still Bitcoin is struggling, as we can see. Technically, we also have this new pattern developing. Please take it with a grain of salt. Patterns fail more often than not. That's why I rely on support resistances and supply and demand levels. So as we can see for here, clear bear flag, clear bearish structure, nothing to question about it. And I also have just one indicator that I use a lot of times, and most of the times is Ichimoku. And I saw that on daily, some people try to push some things on it. I disagree with it. I think that we are in an extremely similar situation with what we have here. So until we do not print clear highs above 76 and take out the highs from, I would say, 80, to have some sort of a continuation, to start printing higher highs and higher lows, I think nothing changes. Actually, I even mentioned to my guys that from here, I might be looking for shorts if you drop back under 74. As long as we stay under 80, rejections like this can be used for shorting. Above 80 and towards 85, I'm going to be less interested in shorting. Above 85, I'm going to flip to neutral, and above 94, I have to flip bullish because I listen to price, not to my bias, not to my emotions, not to my feelings, not to anyone. So plan is very simple. Under 80, rejections like this, I'm going to use them to short. Above 80, I'm not going to do anything. Above 85, so between 80, I would say between 80 and 94, I'm going to be neutral. And I'm just going to see how we print and what type of price action we have. But until then, it's just business as usual. And like I said, from Ichimoku, I think that this price action is extremely, extremely similar with what we had in late January, at least until now, until we don't have a continuation above 80, right? So it's extremely similar with what we had here. I don't know if we're going to have the same type of continuation. Most likely it's not going to be the same. It would have, it will be fairly easy for me to trade the same setup, but it's something to take note of. So this is about Bitcoin. And about Ethereum, the game plan is extremely simple. I think I reposted these charts a few times in January. I had two important levels on the way up, 2,145, which was breached initially, but we rejected perfectly from 2,400. We had a drop lower, and now we are again rejecting from 2,400. So as long as we stay under 2,400, for me, it's extremely bearish. Break above 2,400 and a continuation above 2,785, and I'll flip neutral. So between 2,785 and 3,000, 3,050, I'll be neutral. I will be bullish just above 3,050 area, so 3,000, 3,050 area on a weekly close. Because at that point in time, most likely in this structure, we will have the bottom, at least the local bottom. Until then, we can have all sorts of false breaks, fake outs, etc., liquidity grabs, call them however you want. So 2,400 up to 2,785. I will see what type of price action I have here, and I might think for some shorts again. Above 2,785, I will be neutral. And for me, the bear market bottom under the current structure will be only above 3,000 area. I know, I might miss some potential percentages, but it's fine. So even if I miss 30% on the way up, and other people might, get the early entries here, and I buy Ethereum above 3,000 and I start longing it from 3,000. If this will be the bear market bottom, which I doubt that is like the true bottom of this bear market, from 3,000, I'm going to have a lot of fun time up to 5,000, 6,000, whoever knows how high Ethereum is going to go in the next bull run. So pretty simple, bullish on S&P 500, bullish on NASDAQ, bearish on Bitcoin under 80,000, bearish on Ethereum under 2,785, 2,800. I thought that it's going to be much faster like this. It's going to be much more useful like this if you guys also going to have the levels, both on TradFi and on Bitcoin and crypto. With that being said, thank you for watching. Don't forget to like, subscribe, and see you in Paradigm.